Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. Today, a very green day, very unlike last week where it seemed like every day was red, red, red. What's down 2%? What's down 5%? What is down 10%? Whereas this week, it looks like we could be recovering. Are we in store for a Santa Claus rally where we could just float up toward the end of the year on less and less volume? And remember, last year that happened, and January was also white hot until the bubble popped back in February of 2021. So very exciting in the market. We're going to look at a ton of different charts. We're going to see what's up big, and what isn't performing to what we think, and just looking at all of it. If you are new to the channel, welcome aboard. Hit that subscribe button here at Unlimited Options Investing. We talk everything from stocks, crypto, options, ETF. We're investing for the long term, and we're not panicking when the market goes down. We buy the dip, and we have a long-term horizon. As always, smash that like button. Let's get started. And we are green across the board. The one thing that isn't green would be the VIX. So we mentioned in a previous video how the VIX likes to spike up. It's very acute, and then it drops back down, and we see a massive gap down, similar to the gap up that we're seeing in the rest of the markets. We look at the put-call ratio, the PCC. No surprise, we're lower than we were on Friday, where it was trading at 1.2, and that's usually a decent buy signal. And that makes sense because on Friday, there were that many more puts being open than calls. That's usually retail, and Wall Street wants to expire all of those options worthless. The 10-year yield is looking to recover, and what we've noticed is that it's been pretty detached from the NASDAQ and tech-heavy indices, and I only expect the NASDAQ to find weakness when we do reach the higher levels of this channel when it comes to the 10-year Treasury note yield. So maybe above 1.7, 1.75, that's when the NASDAQ will be like, hey, we haven't been at these levels in recent history, and then maybe at that point we could see some weakness. The FAANG index today, 2.61%, and look at that on the S&P 500. All the big tech is up. Tesla up 3.61%, Amazon 2.55%, Facebook 2.5%, Google 2.62%, Nvidia 5.68%, Microsoft 2.81%, and Apple 3.35%. Big tech leading the way with the rest of the market. And the other day in my video, I was mentioning how we were below that 50 EMA on the daily, and usually when FAANG is below that 50 EMA, it has always been a buy over the past year, ever since the correction in September of 2020. When we take a look at the Dow Jones, this one gapping up again a second day in a row, above the 20 and the 50 EMA, and we're above the upper limit of that channel. The S&P 500 also gapping up above that 20 EMA. Now, we don't necessarily need to fill in this gap, but what we could do and what would be healthy is if we did pull back toward the 20 EMA, and then after that, ripping on higher, testing the previous all-time highs. And if we don't pull back, we can continue just ripping higher. Or at the very least, what we would want to see is some kind of consolidation that the buyers are able to sustain these levels. The NASDAQ, the QQQ, a massive gap up as well, right above that 20 EMA. So we opened above it and we're pushing our way higher. So if we do see some kind of pullback, it would be healthy toward maybe even this 20 EMA over here, and then eventually continuing on higher, potentially even going back to that 52-week high that we hit a few weeks ago. The IWM, and I actually made a video about it a few days ago. Here is the opportunity in the stock market, and that was the IWM, the Russell 2000 ETF, which makes up the 2,000 smallest companies of the Russell 3000 index. And what we talked about in that video is how the S&P 600 small caps are now trading at historically low valuations, right now at a forward PE ratio of 14.4. And when we look back at the last 20 years of data, if we take out the last big recessions of the 2020 crash, the 2008 financial crisis, the last time we were this low was back in 2018, and at that time, you could have bought anything really across the board, even mid caps and large caps, that they were also at historically low valuations, and you would have made a ton of money, and we're especially seeing that right now, I believe, with these small cap stocks. 2022 could be the year for small caps, and a ton of money could be ready to be made. Bitcoin, even this one looks like it's recovering. Let's take a look at the 4-hour time frame for this one. So after that big drop on the weekend, we could be creating a double bottom over here, and if this continues going up and we go above, let's say 60,000, that could be really bullish. The double bottom could be confirmed, and things could get really interesting for the crypto markets. Ethereum, no surprise, we're seeing something very similar. This one has been stronger between the two, and we can clearly see the double bottom being formed again with this one. And we can see the low that we reached this past Saturday at 3,500. Now we're trading almost $1,000 per coin higher. And Cardano, and I think across the board when it comes to crypto, there's a lot of double bottoms that are being formed. We can see it similar with this one as well, but we need to see the confirmation. We need to see it continue finding strength. and breaking those key levels. Even with this one, maybe around 165 or 170, where we know we had previous selling pressure. Then Christmas could be looking very nice for anyone in the crypto market. Gold, silver, and oil. So gold, again, is still very choppy. We can't form any patterns just yet. We have to continue monitoring it and seeing if anything changes. Silver also being depressed, as for some reason it just keeps respecting that 20 EMA until it breaks it. We're still going to be monitoring that one until we see some kind of change. And US oil, this one actually looks like a very nice trade. And after oil crashed last week, a lot of accumulation, and then we see it rip up higher over the last couple of trading sessions, clearly finding strength over the 20 and the 50 EMA. And that's the end of my video. Thank you very much for watching. Let me know in the comments below, do you think there's going to be a Santa Claus rally in the market? Are we going to be green for the rest of the year, or is this just a bull trap for the bulls and the bears are going to take over the market after such a big gap up on the day? Let me know in the comments below. As always, subscribe and like, and I'll see you in tomorrow's video.